Next thing we need to talk about are trust accounts. And first of all, what is a trust account? Well, anybody that would be collecting and holding money that belongs to someone else, the law says it has to be kept or maintained in a trust account. Now, sometimes you may hear people refer to it as an escrow account. There is a difference between trust account and escrow accounts, but really what we're dealing with here and in real estate, we're just going to say they're one and the same because there's not a whole lot of difference there, and we don't need to be worried about the precise differences. So if you hear the word trust account or escrow account, we're talking about the same thing. So don't let just the two terms cause you any problems there. But the first thing is saying here in A1, it says the account set up by the real estate firm in which they deposit funds belonging to the public. Again, if you're going to be collecting or holding other people's money, well, what kind of money are we talking about? Well, if someone is buying real estate, then it's common. They don't have to, but it's common. The buyer will put up some amount of earnest money to go along with their offer. Well, they're going to provide that earnest money to their agent, right? However much it is. And then the agent has to keep that money in a trust account because that money belongs to the buyer. It's not the company's money. So it has to be kept in a trust account. And this next bullet, basically what it's saying here, when you open the account, it must say on the account, trust or escrow account. You can't just have like a checking account or a savings account that you've decided is going to be used as a trust account. That won't work. It has to say on the account. When you open the account, it's got to say trust account on the account. All right. And then that third bullet is just saying, if you have a company, a real estate company with multiple offices, and there's a lot of those out there, you really have an option here when it comes to trust accounts. Now, you could have a trust account for each office. You could do that. But because it's really all still one company, then the law just requires that you have at least one trust account as long as each office has access to deposit these funds into. And then typically, if it is just one account, which is usually what it will be, then that account will be held usually at the corporate office, wherever that may be. But again, all the offices would have to have access to make deposits into that account. Now, in paragraph 2, here it's just saying the broker in charge is going to have to maintain accurate records, obviously reflecting any transactions. So any monies you receive, any monies you disperse out, there's got to be a record that indicates what you've taken in and what you've dispersed out. I will tell you, when it comes to this trust accounting, it's a lot. It's a lot of work. Now, the good news for you at this moment, it's not that big a deal to know what all the records are, because you're not going to be doing the bookkeeping and stuff like that. But here's just to let you know that the broker in charge has a lot of responsibility to be able to accurately record and reflect what's going on with the public's funds. In paragraph 3, here's just saying that when you open the trust account, it has to be an insured financial institution authorized to conduct business in South Carolina. So if you're conducting a real estate transaction in South Carolina, your trust account must be in a bank that conducts business in South Carolina. It can't be in some other state. That's all they're saying there. And then in paragraph 4, Again, the broker in charge is responsible to provide instructions and training to all their employees and licensees on the proper handling of trust funds. So if something is mishandled, broker, it's going to come back on you if you're the broker in charge. Paragraph B of this portion of law, in B1, says, again, we have to maintain accurate and complete records. We just talked about that. You must maintain backup copies of all records. Obviously, backup needs to be kept somewhere off-site. You better be, at all times, you better be able to produce any document if it's requested. Remember, for how long? For 5 years. And then paragraph 3, it says you may not commingle funds. Well, what is commingling? Commingling would be when you mix the public's money with your money. Commingling is illegal. That's a no-no. This is why when you're holding on to other people's money, it has to be in a trust account. If you put it in any other account, especially an account that you have any of your money in, then you've now mixed the funds. That's commingling. That's illegal. That's a no-no. So if you open a trust account, should you have any of your money in the trust account? No, you should not. You only have a trust account if you're going to be holding other people's money. Now I will tell you there's one caveat to that rule, and you'll see what that is here in a little bit, so I won't get into it now. But you make sure you know what commingling is. I expect they'll ask you. Commingling again is when you are mixing your money with the public's money, and we know that's illegal. Now paragraph 4, I promise you, is another another test question, where it says licensees, obviously if a licensee collects money, earnest money from their buyer, they must turn that money into the broker in charge no later than the next business day. That's the law, and that's what you need to remember. But here's what I want to also make sure you understand. This is not suggesting you should wait until the next business day, or even that you can wait till the next business day. It's just saying you got to turn it in no later than the next business day. The reality is that if I receive this money at say 10 in the morning on a Wednesday morning, you should have plenty of time to get it to your broker in charge by close of business today. So you shouldn't just wait till the next day because it says here no later than. You turn that money in as soon as you can, immediately. You do not want to be holding this money any longer than you absolutely have to. For one reason, if anything happens to that money, again, you're responsible for it. That could cost you your career and your license if you lose the money, or God forbid it gets stolen or whatever. And the longer you keep possession of that money, the greater the chances are something can go wrong. So you need to get it out of your hands. Get it turned into the broker in charge immediately. But obviously, according to the law, no later than the next business day. And then number 5, here it's just saying any broker in charge that does not disperse these funds according to the contract are considered to be incompetent to act as broker in charge. Now that's a kind of interesting statement there. If you don't disperse the funds according to the contract on time, you got to do things right when you're supposed to do it. You cannot procrastinate. You cannot put it off for any reason. If you're not dispersing funds and handling these funds the correct way, again, that's considered incompetency. I just find that term interesting. If the state determines that you are acting in an incompetent manner, do you think there's any chance you're going to continue to act incompetent. No, y'all, you're pretty much done in real estate after that. So, y'all, you don't want to do something that would be considered incompetent. All right. Y'all, this next section, y'all, paragraph C, y'all, we're dealing with rental and lease transactions primarily right here. Y'all will, for example, if you're doing property management, which is what we're dealing with here, do property managers deal with trust funds? Absolutely. In fact, probably more so than someone just dealing with sales. Y'all, if we're dealing with a sales transaction, really the only thing you're concerned about there would be earnest money. But in a management or lease transaction, y'all, they have all kinds of trust funds. Y'all, they got maintenance deposits, security deposits, pet deposits, damage deposits. Y'all, they can have all kinds of deposits. And y'all, deposits by definition is meant to be returned back to the tenant at some point. Y'all, assuming they all comply with the terms of the contract. So in essence, if you collect deposits, y'all, you're holding on to somebody else's money. Y'all, that money would be expected to be returned at some point. So let's look at what the requirements are here. Now, first of all, we already talked about when the licensee must turn it into the broker in charge, or in this case, the property manager in charge. And we know that's no later than the next business day. What you're looking at right here in paragraph 1A, this is, I promise you, will be on the exam. And for some reason, a lot of students have a hard time keeping this straight. So, a lot of things you got to pay attention to right here. But the question we're answering is, now that the broker or property manager in charge has now received the money from the licensee, when do they now have to deposit those funds into the trust account? Y'all, that's what we're dealing with right here. Well, for one, it depends on what type of money you received. Because you'll notice, y'all, number one, it says if they provide you with cash or certified funds, y'all, like from a bank check or something like that, then that money must be deposited within 48 hours of receipt. Y'all, you've got to remember that. If it's cash or certified funds, that money must be deposited into the trust account within 48 hours of receipt. Well, is that 48 hours from when the licensee received it, or is that 48 hours from when the property manager in charge received it? Y'all, it's when the licensee received it. Okay? So this is another reason. You don't want to wait till the next business day if I can get it turned in today. Because the moment that licensee receives the money, this 48-hour clock now starts ticking. And you only have 48 hours to get it in the trust account. Now that may sound like a lot of time, but I promise you, y'all, there's so much bookkeeping involved. Y'all, there's a lot of paperwork that's got to be done before the deposit can be made. And I'm just telling you, as a broker in charge, or quite frankly, a property manager in charge, if you're just holding on to this money when you could have gotten it to me yesterday, and now you're creating all this work for me all at one time, I'm probably not going to be happy with you. But anyway, so what do we need to know for test purposes? Y'all, if it's cash or certified funds, it must be deposited within 48 hours of receipt. But the very next thing it says here, y'all, if they just write you a check, y'all, like a personal check, y'all, now that's a little bit different. Now it says that checks must be deposited within 48 hours of contract acceptance. Y'all, that is different than receipt. Don't get these backwards and don't get them confused. Again, if they write you a personal check, you got 48 hours from contract acceptance. Well, again, if we're dealing with a lease or rental transaction, what kind of contract are we talking about? Y'all, a lease agreement. So at the moment the lease agreement is signed, and quite frankly, when you're dealing with leases and so forth, the time of contract acceptance and the time of receipt, y'all, a lot of times is at the same time. I will tell you, and you'll see this later, so I won't get into it much right now, but when we're dealing with a sales transaction, that is not going to be the case at all. But more times than not, y'all, contract accept, well, the time they sign the lease is usually the same time they write checks for deposits and whatnot. But if it's not the same time, then, y'all, again, the 48 hours starts from the time of contract acceptance, the time they sign the lease. So again, y'all, be careful with it. Y'all, it seems like everybody remembers 48 hours, but they always tend to forget, 48 hours of what? And that of what, it will be determined by, number one, what kind of money did you get? You don't know if it's 48 hours from receipt or 48 hours of contract acceptance unless you know what kind of money was received. Was it cash or certified funds, or was it a personal check? You got to pay attention to all that. I'm telling you, it's going to cause you a problem on the exam if you're not clear. Paragraph B, I will tell you, this is a provision in the law that it has been completely misinterpreted and misapplied. There's a lot of people in violation of the law right here because they're not interpreting this provision of law properly. But let's look at it. B says rent collected by property manager may deposit rent into the operating account. So let's talk about this for a second. First of all, if I'm a broker in charge and I'm also doing property management, which we know a broker in charge can do sales or rental transactions. We can do either one or both. Obviously I have to have at least two checking accounts, two types of accounts. I'll have an operating account, which is my business account. It's where I conduct all my business out of. But then I also have to have a trust account that I'm holding any monies that belong to other people, right? So I've got two accounts that I'm dealing with here, an operating account and a trust account. And I think it would be easier to kind of explain where we put which account we put monies into if I just kind of go through a little scenario. So let's say I'm managing a property for somebody else, for a property owner. I find a tenant, and the tenant writes me a check for the first month's rent, and they also write me a check for the security deposit. Let's just say it's $1,000 a piece. $1,000 for the rent, $1,000 security deposit. Well, now that I've got these checks, now I have to deposit these funds. Well, let's just start with the security deposit. Which account do you deposit that into? Well, obviously that would go into the trust account. But then now I've got the rent. Which account does that money get deposited into? And I will tell you, almost 100% of the time, people will say the operating account. And the reason they're saying that, again, if you go back to paragraph B, what that sentence says, rent collected by a property manager may, and the key word is may, deposit rent in an operating account. Here's where the problem lies. You cannot quit reading right there. You can't just say, well, that's what I want. Which, by the way, y'all, nobody wants to put money in the trust account unless they absolutely have to. Y'all, because of all the bookkeeping and paperwork that will go with it. So if they can put it in their operating account, that does not require all the bookkeeping. They would prefer to put it in the operating account. I get it. But here's the problem, and the problem is the very next sentence. Y'all, you got to read the next sentence. Y'all, it's not on the slide. It's in your book. But basically what that next sentence is saying, y'all, you can deposit rent into the operating account if you are a direct employee of the property owner. The problem is, y'all, 99, maybe 99.9% of the time, y'all, property managers are not an employee of the property owner. The property owner has hired me for a fee to manage property on their behalf, but I'm not an employee of theirs. Right? Y'all, I hope that makes sense. Now, if I were an employee, which means I go to work every day to the property owner's office. I go to his office. He's the boss. He's my boss. I'm an employee. So if I'm collecting rent off from any of his rental property or hers, but their rental property, then yeah, I would take the rent and deposit it into their operating account. Right? Y'all, there's a big difference between being an employee, y'all, a direct employee of the property owner, versus being a property manager that's just being paid a fee to manage the property on their behalf. Y'all, there's a big difference there. And if you are a property manager, not an employee of the owner, then you cannot put it in the operating account. Y'all, look, hopefully this will make things a lot easier. Y'all, here's the question. Y'all, when you get a question on the exam, and they may give you a scenario similar to what I just gave you, asking the question, which account do you deposit this money into? Well, the question you need to ask yourself about the question, y'all, who does that, whatever money they're referring to in the question, who does that money belong to? Who does it belong to? Well, let's go back and look at this scenario. We know they gave us a check for a security deposit. Y'all, who does that deposit belong to? Y'all, that belongs to the tenant, right? You know, at some point, probably at the end of the lease, you're supposed to return the deposit. Y'all assume they didn't tear nothing up, but y'all, we have to assume when we collect it, it will be returned back to the tenant. So whose money does that deposit belong to? The tenant. Is it mine? No. Well, if I'm collecting money that's not mine, by law, that money has to go into the trust account. Now let's talk about the check for rent. Well, who does the rent belong to? The property owner. Is it mine? No. Y'all, I'm just the property manager. I'm collecting the rent. I'm doing this on behalf of the owner. But y'all, that rent belongs to the property owner. It does not belong to me as the property manager. So if it's not mine, I'm collecting it for somebody else. Which account does it have to go into? The trust account. It's still got to go in the trust account. And it will be dispersed out of the trust account according to the terms of the contract between me and the property owner. Okay? So, y'all, I hope that makes sense. But so typically rent has to go into the trust account. Y'all, the only exception in what the paragraph B is saying, the only exception to that is if you're actually a direct employee of the property owner. Y'all, you work for them. You don't manage other people's properties. You just work for this particular property owner. then you can deposit it into to their operating account. Now, the other thing is saying here in paragraph B, y'all, a lot of property owners, and quite frankly, some property managers, they may say we don't charge security deposits. Rather, what we charge is first and last month's rent. You got to pay that up front, first and last month's rent. And the reason they would do that is because they're saying, well, because it's not a deposit, it's rent. And as long as it's rent, I do not have to have a trust account because I'm not going to be giving back their rent, right? Y'all, that is not going to work according to the law. Because, y'all, the very next thing is saying there, still in paragraph B, y'all, any advanced or prepaid rent must go into the trust account. Y'all, so any rents paid in advance, y'all, obviously the last month's rent is considered a prepaid or advanced rent. Y'all, you can't just take that money and spend it. It has to be kept in the trust account until the last month's rent is due. Y'all, just for example, y'all, I've had properties that I've owned, rental properties myself, and y'all, and I had a few tenants that did this, but y'all, I have tenants that, y'all, even though the rent was due on the first of every month, y'all, they just preferred to pay me like quarterly. Y'all, so they'd pay me like 3 months rent at a time. So they didn't have to pay every month. Well, y'all, obviously the rent that's currently due, y'all, then obviously I could put that into my operating account. But those other 2 months rent, y'all, those that was not due yet. So I had to keep that money in a trust account. And then when the first of the next month came, then I could pull at least 1 month rent out of that trust account, put it in my operating account, and do whatever I want to do with it. But y'all, if it's advanced or prepaid rents, y'all, it's got to be kept in the trust account until that rent is actually due. Okay? Y'all, a tenant could pay you a full year worth of rent. Again, if your lease is set up that it's due on the first of every month, then y'all, you can only collect or spend that particular month's rent. Y'all, so it all has to be kept in the trust account until each month comes around and you can pull out that month's rent. Anyway, y'all, hopefully that makes sense to you. All right. Y'all, here it's just talking about, y'all, paragraph C2. Y'all, it's just identifying the different types of money that property managers may be dealing with. We already talked about it, but like security deposits, pet deposits, and so forth. Y'all, all kind of deposits, advanced rents, all that stuff has to go into the trust account. But then it says that, y'all, these deposits, y'all, if it is in fact a deposit, y'all, it must be returned when the rental agreement expires according to the terms of the written contract. So we know once the contract expires, y'all, the lease agreement is expired, y'all, and assuming they took care of the house, they didn't break anything, and there are no issues, then obviously then you have to return their deposit. Now, you'll actually see this in the next chapter. Y'all, in the next chapter, we'll actually be going through the South Carolina Landlord and Tenant Act. And in that law, you don't have to write this down now necessarily because you're going to see it in the next chapter, but you have to return these deposits within 30 days of the lease expiring. So again, that's money that you're holding holding for the tenant, so it has to be kept in the trust account. Now in paragraph D, y'all, now they're talking about sales. Y'all, and this is going to sound very familiar to you. But if it's a sales transaction, y'all, and again with sales, we're really only dealing with earnest money. But so when does the broker in charge have to deposit earnest money, which is obviously a trust fund? Again, if it's cash or certified funds, it must be deposited within 48 hours of receipt. If it's a personal check, it has to be deposited within 48 hours of contract acceptance. Y'all, that reads exactly the same way as if it were a lease deal. Y'all, there's no difference in what the law is saying here. But I will tell you, y'all, a big difference, and I kind of alluded to this here a moment ago. Y'all, when we're dealing with sales contract, y'all, if a buyer makes an offer today, y'all, and obviously if they're putting up earnest money, y'all, they have to go ahead and typically they will go ahead and put up the earnest money with the offer. Again, it's been held by the licensee, right? And the licensee has to turn that into the broker in charge no later than the next business day. But if it's a personal check that the buyer writes to the brokerage company, then y'all, that money does not have to be deposited until the contract's been accepted. You already got 48 hours from contract acceptance. Y'all, it could potentially be days and sometimes even weeks, believe it or not, before the buyer and seller actually agree to all the terms and have an accepted contract of sale. So what are we doing for those days or week or however long it takes to get the contract accepted? Y'all, what is the broker in charge doing that money? Typically, they're probably keeping it in a safe in their office or in their desk drawer or whatever, but rarely, typically they're not going to deposit that money until the contract is accepted. And again, the reason they do that, again, because there's so much paperwork when you deposit money into that trust account. Well, what if the contract is never accepted? That means you got to give them their money back, and now you got a lot more paperwork. So you had all this paperwork we did because we deposited into a trust account, and we didn't even need to do that. So typically the broker in charge is just going to hold the personal check, not deposit it, until we make sure the contract is accepted by all parties. Then once it's accepted, now you have 48 hours from that point to get it deposited into the account. Now it does say, this 48 hours, does exclude Saturday, Sunday, and bank holidays. So obviously, so this 48 hours is business days. Okay? Just so we're clear there. So hopefully that makes sense. But I'm just telling you, I see it all the time. Do not confuse when the licensee has to turn it into the broker versus when the broker has to deposit the money into the trust account. And even then, you better remember, the 48 hours depends on what type of money you received, right? In terms of when that 48-hour clock starts ticking. Okay, moving on. In paragraph D, here it's just saying that once that money is deposited into the trust account, you cannot take it back out unless one of two conditions have been met. Either the contract must be consummated. Well, what does that mean? Consummated means we've closed. We've closed. Everybody's done what they agreed to do. The transaction is complete. Then you can disperse those funds according to the contract. But if for some reason the contract is not consummated, then it must be terminated, being the contract. But either the contract must be consummated or terminated, and until one of those two things take place, you got to leave the broker in charge has to leave the money in the trust account. They cannot take it out for any other reason. Now here's what I want you to be careful of here. Just to give you another little scenario. Say a buyer makes an offer, seller accepts it. So obviously now the broker in charge now has to deposit those funds into the trust account. Well, typically within the first couple of weeks, anyway, hopefully the first week, but certainly within the first couple of weeks, y'all, the buyer's going to have a due diligence period in which they're probably going to be doing home inspections and stuff like that. Well, according to the contract, if there's any issue with the home inspection, the buyer can terminate the contract, get their money back, and walk away. But let's just say in this scenario, the home inspector found something wrong with the house. So the buyer sends a repair addendum to the seller, basically saying, here's what the home inspector found wrong with the house. And if we're going to buy it, we need you to fix this issue before closing. And for argument's sake, let's just say the seller agrees to it. They agreed to fix whatever it was, they agreed to fix it. And then a few days later, we get notification from the seller. We're ready to close. Whatever the issue is or was has now been fixed. When you get that word, if you're the buyer or buyer's agent, should you go back out and re-inspect that? I think you should. Absolutely should. The problem I see with most buyers, rarely do they have their home inspector go back out to look at it. And I'm sure it's because they probably have to pay them a little extra again to go back out there and re-inspect whatever that was. So oftentimes what you'll see is just the buyer and the buyer's agent will just go look at it themselves, like they know what they're looking at. But anyway, that's what they'll do. But let's say in this scenario, the buyer is not satisfied with the way it was fixed. They say, no, I'm not going to accept this. It was not fixed properly or whatever. So the buyer says, get your contractor back out here, have them fix it properly, or again, I'm not buying the house. Well, now the seller's saying, no, it is fixed. And I got a contractor right here, in writing saying it's fixed. And I'm not going to fix it again because you don't like the way it was fixed originally. I will tell you that's a very common issue, and usually because the agent didn't know what they were doing when they were writing up the repair addendum. You can't just send a repair addendum saying we want you to fix this. What's the chances that seller's definition of fixed is going to be different than the buyer's definition of fixed, right? So you got to be very specific and clear on what you want done, what you expect the seller to do to meet the buyer's requirements. But in this case, we just said we wanted it fixed. Now the seller's saying it is fixed, and quite frankly, they got a document from a licensed contractor saying it is fixed. It's just the buyer's not happy with the way they fixed it. So the buyer now saying, you know what? Well, then if you're not going to fix it the correct way, then I'm out of here. I'm not buying the house. I'm done. I am not buying the house. And now the buyer obviously is wanting their agent to give them their earnest money back so they can now go look for another house. Well, can you do that? Can you give them their money back now because they're saying they're not buying? Can you give them their money back and now go look for another house? Well, we got to look at this provision here, again in paragraph D. Well, first of all, has the contract been consummated? No, we haven't closed. So it's certainly not consummated. All right, well, is the contract now terminated? The buyer said, I'm not buying this house. And they're not kidding. They're not going to buy the house. So is the contract terminated? A lot of times I hear people say, well, yes, it's now terminated. Here's the problem. If you recall back in the contracts chapter, we actually talked about different ways you can terminate a contract. Do you recall if any of those ways to terminate a contract included when the buyer gets mad at the seller and says, I'm not buying anymore? No. That is not how you terminate a contract. Y'all, just because the buyer decides I'm not buying, that does not terminate the contract. What do we have to terminate the contract? Remember, we either have to have a release or a rescission. Y'all, in other words, both the buyer and the seller must agree to terminate the contract in writing, and not only agree to terminate it, but they must also agree who's going to get or keep the earnest money. Because y'all, in a lot of cases like this, the seller's going to say, look, I'll let you out of the contract, but I'm keeping the earnest money as liquidated damages because buyer, you're the one at fault. But the buyer's thinking, no, I want out of the contract and I want my money back because you're at fault. Y'all, they cannot agree on who's going to get or keep the money. So until they can agree, it is not terminated. So that money has to stay in that trust account. And I know some of it, well, how long does it have to stay there? Until they agree. Okay, I mean, actually we're going to look at some other ways potentially to disperse these funds. But I'm just telling you, if that contract's not consummated or terminated where both parties agree in writing on what to do, that money better stay in that account, or somebody's going to wind up getting themselves in a whole lot of trouble. Now in D2, it's listed 3 times when the broker in charge can disperse the funds. Take it out of the trust account, give it back. Paragraph A is if the offer is rejected. If the seller rejects your offer, obviously you can give them their money back. That's why we don't even deposit the money until the offer is accepted and we have a contract to sale, right? Just in case they reject it, then I can just give them their check back and no issue. Paragraph B, upon withdrawal of the offer, not yet accepted. Again, back when we were talking in the contracts chapter, do you recall a time or an amount of time in which the buyer can make an offer but then change their mind and rescind their offer without penalty, meaning they can just take their offer off the table and get their money back? Remember, buyer can do that. They can rescind their offer up until they've been notified of acceptance. Once the seller or listing agent notifies you that we've accepted your offer, you can no longer rescind or pull your offer back, and you cannot get your money back once they notify you it's been accepted. But as long as you change your mind and pull the offer off the table before they accept, then you could also get your money back, your earnest money back at that time. And then paragraph C, the only other time would be at closing. Once it closes, then all parties have met their obligations. They've done what they were supposed to do. In other words, it's been consummated, right? All right. What if we don't have any of those? So we have the dispute. The buyer thinks they're in the right and they should keep their money. The seller's thinking the buyer's in the wrong and I'm keeping the money if you don't buy the house. Well, then we have a dispute. Well, then how does this dispute get resolved? And they list some ways here that these disputes could be resolved. Obviously a written agreement where both buyer and seller just agree on what to do and how to do it. That's always the best way, by the way, but for a lot of times it doesn't happen that way. You could file an interpleader action in court. You could receive a court order. Court meaning, if the say the buyer files an interpleader action in court. They go to court. They're suing for their earnest money. A lot of times what will happen there, the courts will notify the broker in charge of the suit that's been brought forth, and they will the court will order the broker in charge to release the earnest money to the courts. And then the courts will hear whatever the arguments are on both sides. And then the court will decide who's going to get the money. So that's what they're talking about. So if you get a court order, obviously you won't, your broker in charge would. You have to, if they get a court order telling them to release the monies to the court, then obviously, anytime you get a court order, I suggest you do like they say. But the last way is just through voluntary mediation. You could mediate where maybe a mediator will try to convince them to, well, I tell you what, since we can't agree, can we just agree that seller, you get half of it, buyer, you get half of it, or whatever. But look, at the end of the day, you see the different ways you could go about trying to resolve a dispute. But at the end of the day, if the dispute is not resolved, if I do not have a court order, or I do not have something in writing where both parties have agreed on what to do, that money is going to sit right there in the account for however long it takes. It could be, in fact, you may not ever take money out of there. It may sit there forever. Because a lot of times what will happen, both parties just walk away from it. It may not be enough money to get an attorney and go to court, so they don't want to do that. But they're not willing to let the other party have any of it either. So both sides just kind of walk away and the money just stays there. And the broker in charge has to continue accounting for it. And then in paragraph F, again, we know we have to maintain these records, hopefully you remember, for a minimum of 5 years. Okay. And then paragraph G, here's just said when you open the trust account, when you initially open the account, you can open it as an interest-bearing account or a non-interest-bearing account. You can do it either way. But if it's going to be an interest-bearing account, you must disclose that to your buyer or tenant or whoever's giving you money. You must disclose to them that this money is going to be deposited into an interest-bearing trust account. And then they must also acknowledge that any interest that may accrue while it sits in that account will be retained by the broker, the real estate company. Okay. So in essence, you got to let them know about the interest being accrued, and they must agree in writing that they are waiving any interest that would accrue while it sits in that account. I suspect that will also be a test question, so just beware. You got to disclose if it's an interest-bearing account, and that they are waiving any interest accrued while it's in that account.